The Art of the Market Crash by Donold. The Dow Jones Industrial Average decreased by 2,963.04 points, or 6.81%, over a span of just 85 days, and there are still 1,375 days remaining for potential further crashes. On January 20th, 2025, the DJIA closed at 43,487.83, but by April 15th, 2025, it had fallen to 40,524.79. The S&P 500 index decreased by 600.03 points, or 10%, in the same 85-day period, with 1,375 days remaining for potential further crashes. On January 20th, 2025, the S&P 500 closed at 5,996.66, but by April 15th, 2025, it had dropped to 5,396.63. The Nasdaq Composite decreased by 2,807.03 points, or 14.3%, over a span of just 85 days, and there are still 1,375 days remaining for potential further crashes. On January 20th, 2025, the Nasdaq Composite closed at 19,630.20, but by April 15th, 2025, it had fallen to 16,823.17. The Russell 2000 decreased by 406.72 points, or 17.79%, over a span of just 85 days, and there are still 1,375 days remaining for potential further crashes. On January 20th, 2025, the Russell 2000 closed at 2,286.40, but by April 15th, 2025, it had fallen to 1,879.68. Understanding severe recession versus the Great Depression. Think of it as a matter of scale and systemic impact. A severe recession is a very bad storm that causes significant damage and takes time to recover from. The Great Depression was more like an economic ice age, a prolonged period of catastrophic collapse that fundamentally reshaped the landscape, destroyed vast portions of the existing financial structure, and required a complete rethinking of economic policy and the role of government to eventually overcome.